following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the April 2nd, terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope each and every one of you had a wonderful Wednesday. Let's make sure that we do everything we can to have a terrific Thursday. How about a fantastic Friday, a fantastic weekend out there? Of course, the markets are closed tomorrow, so we've got a nice little, 4-day weekend out there. That is a beautiful thing. Let's make sure that we do everything we can to just simply get everything out of it. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I, we make that one little shift, that things happen for us, not to us. It means that you and I can find a gift in every set of circumstance that life is going to go throw at us, and that's really what the role of life is all about. That's the role of the universe out there. It's just for you and I just to be able to kind of take that Rubik's Cube, take all that information, and be able to find the gift. No, you give me a gift each and every day, and that gift is the gift of your presence. And I'm absolutely here to serve you. So feel free to call in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. That way, you and I, we can go on a safari. We can go looking for bulls and bears. I'll assist you with whatever it is that I can. Of course, this is terrific Thursday, none other than the Hotel California Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got the Dow futures trading down 16 points at 17,598. S&P futures off 3 at 2,049 and change. NASDAQ is off about 6 points at 4307. Russell 2000 down a point at 1248. The King dollar back 480 ticks at 97.95. Gold is off $6 right now, trading at 1202. Silver down 27 cents, 1 6/10%. That's trading at 16.78. Light sweet crude off nearly $1 right now, trading at $49 and a little bit of change out there. Natural gas up a tad. Quick peek across the globe. Of course, you know we like to do that just to get a feel for what's going on. Of course, if we take a look at what happened in Asia last night, hey, a sea of green out there. So the U.S. must have handed the ball off in a nice fashion out there. You had the Shanghai. That was up 0.4%. That's 16 points. The Hang Seng up about almost 0.8%, up 193 points. The Nikkei up 277 points. That was up 1.5%. Right now, as we speak, the FTSE's green. It's up $11. The DAX is back $25. Of course, the DAX has been so strong out there that, you know, it can kind of do its own thing. We know that it's just simply moving sideways, just working off an bought condition before it decides to resume its direction higher. A quick check at the FTSE. Let's start off looking at the FTSE. Of course, we know that the numbers that we're looking at, probably accidentally deleted that chart there. Good Lord. Mm-hmm. I hate having to redo work over and over again, but that's the deal. That comes with the territory. Let's take a look at the FTSE here. Let me go put those numbers back in my screen. Let me put this. It's going to be easier. Let me put this on a monthly chart out here as we take a look at the FTSE. Now I just got to pull it back. So the all-time high that we're dealing with here, that's the level, that's the real hurdle out there. That's its 4-minute mile. That's the 6950.60 level. That takes you back to 1999. And then, of course, the July 2007 hurdle, that's at 6754.10. The FTSE is trading inside that above the 2007 level. That's a positive. Says to me that the run to 6950 or the attempt to take that out is what is going to occur out here over the course of, between now and between now and May 4th out there. And I suspect it's going to go ahead and take out that 69.50 level. That was looking at a longer term chart, but you got the feel for it. If we take a look at the DAX, let's go look at the DAX. Let's look at the DAX on a monthly basis. We haven't done that as long as I've got the monthly charts up here. Now, here's a beautiful thing. If we take a look at the DAX, you can see that it's already above the 1 to 1.618 A to B equals CD. If we take a look at last month, in fact, this is actually, let me just do this. I wasn't sure really what to do here this morning. Not that I struggle with what to do, but, what am I going to show you? Something new, just to kind of put things in perspective. Now, you know that we take a look at that correlating chart between the DAX, the FTSE, the S&P 500, just to show kind of like the one world market out there. Nothing has come unglued. The DAX, super strong. Look at that DAX. That DAX is headed up to 12,988. No bearish reversal signal at all for last month. In fact, if we just take a look at the quarter, we can go ahead and take a look at the quarterly chart out here. Let's go take a look at that. That says, hey, we just ended the first quarter, did we not? Take a look at the strength of the DAX when we take a look at that quarter out there. If you look at candles, which you should, because this is how the bulls and bears communicate with you and I. They communicate by understanding candle strength. They communicate to us by understanding candlesticks that are truly reversals both bearish and bullish. There are a couple of neutral candles that are out there. That way there's agnostic. So there's a little bit of everything for everyone out here. But take a look at the quarter in the DAX. Let's go take a look at the quarter in the FTSE out here. I guess it's easier. Well, maybe I can do it this way, can't I? Yeah, I can do it like this. We take a look at the FTSE out here. Let's look at its quarter. Yeah, its quarter, not too bad overall, but, just kind of like one of these spinning top type candles out there. A little bit of movement, but the DAX is the one that truly is on fire. It's headed up that 1 to 2 area. But let's go take a look at our markets. I guess I tried to point this out a bit yesterday, but visually, let's take a look at the, let's come back here. Let's take a look at the Dow. So as long as we're in the quarterly stuff, just to give you a feel. So here's the quarterly. So what we can see here, where we began January, here's the candle for the quarter. It's not the current one we're in, but it's the last one that we're in. You can see that in the case of the Dow, we opened up on January 1st. The open was at 17,823. The close was at 17,776. How about that? 1976. And wasn't 1976, but, 1776. And so we had a little doji candle out there for the quarter. Basically, no movement, right? Just simply sideways. Now, the doji candle can mean a whole lot. Of course, we've got an entire quarter that we've got to deal with out here. But just really, I guess the point is this. With regard to the U.S. markets, no movement. In fact, let's say, well, I can't say no movement, okay? Because the Dow has got no movement, right? But what about the Russell 2000? In other words, there's a lot of folks out here that I hear. First of all, for as bullish as these markets are, and as many people that are saying this is coming to an end out there, and typically bullish markets end in some type of euphoria, I am not hearing any kind of euphoric stuff out there. Are you? Yeah, they do polls out there, and the polls say, hey, 85% of these money managers, think the markets are going to go up, and maybe that's a contrarian figure out there. When you get underneath the details, and I hear them, whether I'm driving around or you're watching on television, whatever it might be, I'm not hearing this irrational exuberance. I'm not hearing this euphoria out here. But what I am saying is that if the markets are really going to crack, typically, the market's that, again, leading to the upside, leading to the downside, not pulling it up, not pulling it down, but leaders with regard to a message of the market. You like to look at the Russell 2000. Hey, if an interest rate rise was really, really going to just crater everything out here, and with as much as being talked about with regard to interest rates rising out here, you don't think that the Russell 2000 would hear that message? I think it would. Right, there's the small caps that are going to struggle with the rising interest rates, are they not? Small businesses trying to go out and get loans. In any event, just take a look at it. Take a look at its quarterly candle. It actually finished up towards its session high. Not at it, but, so in the Russell 2000, what we've seen here is really that breakout of the consolidation. When we take a look at the Russell 2000, we take a look at, say, A to B equals CD pattern to the upside out here. Let's go see where it's at. It's just simply made that 1 to 1.272 level out here. No bearish reversal signal. In fact, from a quarterly standpoint, the only bearish reversal signal we saw was July 1st through September 30th. And then that was just simply completely negated originated back here in October 2014. So what does this say? What this says to me is when we take a look at utilizing our A to B equals CD ruler out here, that this has a price projection target of 1453 out here. Now we know 1350 becomes its monthly consolidation breakout move. That's the equal to or greater than move when you break through a consolidation. So it looks like 1350, 1450 is really the message. For the Russell 2000. Now, Russell 2000, really, if you take a look at U.S. indices out here, let's look at the New York Stock Exchange, just as an overall feel for what's going on inside the market. Let's take a look at it from a market breadth standpoint. Same, really, last quarter, just simply doji candle out here. But what we do know, if you just simply take a look at the quarterly chart out here, is price is above the 2007 level. When price breaks through a resistance area, and look, when you're looking at swing points, highs or lows out here, they just become these natural levels of resistance. The way I like to look at it, maybe describe it, is most people can picture the Olympics. And why do I say the Olympics? Because most people can picture pole vaulting, all right? Or hurdles. You don't typically see those when you turn on the sports other than during the Olympic time periods out here. And, if you take a look at the pole vault, your hurdles of some sort, everybody is, records are always being increased out here, right? And so it's a hurdle to get above those next levels. But then once you get above those next levels, then you feel like you can do anything out here. That's at least the way that the market responds. And in the case of the New York Stock Exchange, from a quarterly standpoint, you saw price close above it in 2014, come back in the first quarter, come back and test it in the second quarter, continue to move higher in the third quarter, come back and test it in the fourth quarter. So this level here of 10,387.17, now look, that's a really important level. You break above resistance, old resistance should become new support. That's what we have here. And we have seen now multiple tests of that area. It's why it's very important. If the markets are going to crater, and I'm not in that camp, I'm not even close to that camp out here. That camp is off in the distance. We'll get there, but we are not there just yet. I'll change my mind if we see a close with conviction below this 10,387.17. If you're looking for messages out there, hey, that is a message that I would look at. And that's in the New York Stock Exchange. Now, with regard to our markets here in the U.S., are they going to take off topside? They are going to move higher through May. I know that we've got these longer-term price objectives out there, and so that's where I hang my hat. I don't know what time period it is that it takes in order for those price objectives to be met, such as like the one in the S&P 500 that is looking at the 2350 to 2450 level out here. But certainly, if you look at a quarterly chart out here, there's really nothing bearish about this chart. If we look at its A to B equals CD pattern, something, it doesn't matter what time frame it is that we use out here. If we take a look at its whoops, that didn't work out real well. Didn't grab the right swing points. But if we look at it and see what its price objective is out here, it's already above the 1 to 1.272. It says it's headed to 2213 as its next move. Your 1 to 1.618. A to B equals CD to the upside. Hey, this is Steve Rhodes. This is TFNN. Right now, Dow futures off 15, S&P down 3. We'll be right back, folks.
As this one-of-a-kind winter comes to a close and spring approaches, it only seems fitting that now is the perfect time for a spring Tiger Dollar sale. For this week only, we're doubling the bonus that we give when you purchase any amount of Tiger Dollars. Normally, we offer a 10, 15, or 20% bonus when you purchase Tiger Dollars, but for this week only, we're doubling our special offers and you can now get up to a 20, 30, or even up to a 40% bonus on your Tiger Dollar purchase. This is one of our best Tiger Dollar sales of the year and won't be around for long. Tiger Dollars can be used for any TFNN product or service and provide a great way to lock in added value on your subscriptions. Tiger Dollars never expire, so whether you're a current subscriber or plan on subscribing at one point in the future, take advantage of this spring Tiger Dollar sale this week only and get up to a 40% bonus on your Tiger Dollar purchase. This sale ends Sunday night, so don't miss out. All the details are on the front page of TFNN.com. Get your Tiger Dollars today and lock in your bonus before this sale passes you by.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. While we were at that break, during this breakout here, I got just to answer some questions out here. And thanks for sending those cards and emails out there. And so one of the questions and it's a question I get frequently, which is why do I say that the Euro-Japanese yen is the carry trade or is the currency pair that tracks the U.S. stock market better than any other currency pair out there? So I've got our red, white, and blue lines out here on this chart. So hopefully you're watching us on Tiger TV. If you're listening to the radio, your mobile device at TFNN.mobi, thanks so much for doing that. Don't forget, you can catch the live stream of this by going to the homepage at TFNN.com. Over on the right-hand side, you'll see a little button. You can watch us live on Tiger TV. You can catch the archive of the show on Channel 9 as well. And what you would be seeing is the top portion of my chart. I've got 3 panels out here. The top portion is the Euro-Japanese yen currency pair. Now, there's a 10-minute, 15-minute delay on that currency pair. The center chart is the S&P futures contract, and the bottom chart is the U.S. dollar index. And these are all closed. These are 1-minute charts out here. That way you can really see, the activity as far as what's going on, behind the charts. And it's just simply by following this for years now, and watching also what happens with regard to divergences. Divergences meaning that the Euro-Japanese yen is headed higher, the U.S. stock market is headed lower. Who wins the battle? Because it's all about who wins the battle, and who wins that battle is that currency pair. Works just the other way as well. Bottom portion of my chart is U.S. dollar index, which is a basket of currencies. It includes the euro, it includes the yen, but it includes the pound, it includes the Swedish franc, the Swiss krona, and the Canadian dollar. I think I got all 6 of them in there. I hope that I did out there. So it's a basket of currencies, but it's the euro as it relates to the Japanese yen from a directional standpoint that has an impact with regard to our markets out here. Of course, we saw a nice big spike out here. I don't know whether this was payroll data that was released or something like that inside the euro Japanese yen. It's up to, and you can see here the U.S. dollar index has been falling. But take a look at the direction of what's going on inside of the futures contract. It's been rising along with the and here's just kind of a divergence. Just take a look at this. Let me put this line on my screen. So here's just a 1-minute divergence out here. Here you've got the euro moving higher like this. Here's our green line. Just trying to start from the same time period. Here you've got the futures headed this way, and here if we take a look at the U.S. dollar index, it certainly was headed in a southerly direction. Who won this battle, and who went ahead and turned the futures around? Yeah, it was the euro Japanese yen. So this currency pair, now this is on a 1-minute time frame. You go take a look at it on daily time frames, and it gives you the whole complete different picture out there. Oh, you asked me to do that? Okay, let me just go ahead and do that. Let's go take a look at the euro Japanese yen on the longer term. Now this is just looking at the S&P cash index out here. Is this the chart that I wanted to show? Now, this one's the one with the VIX. Let me see. I think I've got another one on my screen here. Give me a moment just to I know I said I will clean this up. And the truth is that I will clean this up. I didn't say when, though. That's the thing. Come on, show up. Show up. It's probably like right in front of me, sticking out. Not that I can't go back to that chart. Oh, I can. But here we go. Now, this shows the euro on the top portion. That's the blue. The green is the S&P futures. Okay, and the bottom is the NASDAQ futures out here. And if we take a look at the euro Japanese yen, you can see that that's the top portion. You can see that it's got a rising bottom out here. Whereas we kind of had a sideways move. We've had a sideways move. Let me just take this arrow. Oops. We take this arrow here and just kind of pull it sideways. It's primarily been sideways to slightly higher. If we take a look at the NASDAQ out here, that's the bottom one. It's been sideways to maybe just slightly lower out here. So on the daily picture, now look, I just, again, I really didn't have any thoughts as to what I was going to do this morning other than answer some emails. I'm going to answer John from New Hampshire called yesterday. He was asking me about trading system. We had some emails going back and forth with each other, and I just said, hey, it's going to be easier for me to just show you what it is that I do, why it is that I'm doing it on the show. Not to sell anything, just simply to be able to answer a question, maybe be able to teach you something as well out here. And I'm in 2 trades as we speak right now. So, but I'll show you. I'll show you those trades, and I'll show you the technique. And it really goes back to a question that I answered inside the Tiger's Den yesterday with regard to taking that G wave pattern, and if something were to have occurred yesterday, would I have taken the trade even going into the weekend and before the jobs numbers come out or get released tomorrow? And I answered that. And so, but let's come back to this, and then we'll go see how the market's going to open. What we can see here on a daily basis, we see that divergence that in the past has led to the direction that the market ultimately wants to go in. And as we speak right now, it's very clear to me that what this also says is that the market wants to go in a northerly direction during a time period that is seasonally favorable. Those are the thoughts of the Euro-Japanese yen. I'm just communicating its message to you. This is Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're up to the rates. We got the Dow
straight at 17,711. S&P is up a point at 2,061. NASDAQ Composite up 6 at 4886. Russell up a point at 1252. The DAX is back 26. The FTSE is up 19. Gold is off $5. Silver down 29 cents. Light sweet crude off $1.17 as we speak right now. Leading the charge to the upside, it is CarMax. KMX is the ticker symbol. Up $5, up about 8%. Tesla's up $4, a couple percent. Asparian Therapeutics up about $3.50. Reynolds America up $2.40. You've got Lumber Liquidators up $1.30 or so. Leading the charge to the downside, Arista Networks. It is off $3.60, down 5%. Google's off $3. Shire PLC, it's only down 67 cents out here. Biogen's off $1.28 right now. And that's really all that is moving, so to speak, in the market. So, okay. So now, what do we go take a look at? Why don't I go try to answer that question about what it is that I'm using and why out here? Now, yesterday I was posed with the question about utilizing what I like to call that seventh inning stretch out, and I like to use all of the tools that I have assembled out here, and that includes the A to B equals CD pattern. It includes using the TAS market profiles. It includes using some of the Chapman wave counts out there. It includes the price relative strength divergent. It includes using the Rhodes momentum trading indicators out there. That's basically the 5 different signals. And then correlations such as, hey, what's going on in the real world, the currency world, which moves the markets? What's going on there, looking for different divergences and so forth. Now, the question that was posed to me yesterday, and then there's 2 of them. I want to see if I can tie all this together out here. And I think I was using the 5-hour chart on the NQ, the 300-minute chart. So here was the question. The question was, hey, if yesterday the market pushed down and it gave us that 7th wave count to the downside, would I go ahead and take the trade? And my response is yes, I would. And then to answer the reason why, well, let's just go take a look at the last time. And I can show this to you time and time again. The last time that price pull moved down into that 7th wave pattern. And that's just simply lettered here with the letters A through G. You can do number counts, whatever it is that you might do out here. So we had a combination of that. We had a combination of price moving lower with less relative weakness out here. And then you had a nice little bearish or bullish reversal signal, a little piercing candle, because the market's always communicating to you and I. So, and we can see here, in this case here, price had been moving lower, had been doing it with less relative weakness out here. So if we get that same kind of a pattern, I take it now with regard to how you tie in the TAS market profiles out here. Well, pretty simple. Take a look at the box itself, the formation of the box. You've got the point of control, that blue line closer to the green line. This says that this is more of a bullish, what I call a bullish formation. That may not be the way that John and his crew will look at it, but I look at it. This is telling me that this has, at least from a trading with inside the box, that this has more of a bullish formation to it. That this favors the buyers versus the sellers out there. So you've got all of these. We had a Chapman wave count, because I like that G, because you just have to put it 1 tick underneath it. We had a TAS market profile. We had a Rhodes momentum signal out here. We had the whole nine yards. So if we got that same type of move, yeah, I'd take it. Well, speaking of that same kind of move, let's come over here. Let's take a look at the chart. Let's take a look at the 10-minute chart, right? That was a 5-hour chart, just to show you how it works on all different types of time frames out here. So I'll show you an actual live trade as we speak right now. This is utilizing how these trades are placed. I place my trades utilizing the Ninja Trader platform. It's inside this platform where I'm able to easily do these counts, where I'm also easily able to have the Rhodes momentum trading signals out here. I've got the TAS boxes. I've got the whole 9 yards as we speak. Well, what happened this morning at 4:40? At 4:40, price was moving down. We got that G wave. We've got that 7th inning wave move to the downside. You got a big old bullish engulfing candle. If we take a look at the TAS market profiles right here, this is also in bullish formation out here. So I went ahead and took the trade. Now look, I have this set up so that it sends me a message to my cell phone, to wake me up if I am sleeping out here. I didn't turn it on last night. So that meant that when I actually got to the computer screen, and when I got to it, it was about 7 o'clock this morning. Price had also moved right above the resistance level, that red line out here in the sand. So I went ahead and took the trade. The trade was right here, just 2 contracts inside the ES Mini. But what it does, it automatically on my screen here, I can make adjustments. I can close out the trade if I wanted to. I can move my target. Here's my target right now. I may change that target. I may do it while we're on the show, on a different screen. I might be talking and doing one thing. I have learned to be able to chew and walk at the same time out here. We're in that 4th leg. That may be all we get. This blue horizontal line across my screen out here, this is significant resistance, which I'd like to see the ES Mini break through, because I'm in a long trade. In fact, what I really ought to do, and I'll do this live here, I should be in a trade here that's a no-lose trade, right? So I'm just simply going to move my stop up right above where I entered the trade, right there. So that's how easy it is to do on this screen. That way, while I'm actually live, doing the radio show, I can go ahead and make adjustments to the trade, entirely to the trade. Now, if I can see the ES Mini close above this line here, 2053 and a quarter, price come back back and test it. I'll take a look at different ways for me to adjust the trade, right? Let's just take a look at the A to B equals CD tool from a price projection standpoint. Here's the A to B equals CD pattern that may be underway as we speak right now. You can see that. Oh, I canceled the order inadvertently out there, but that's okay. I've got another order that's on a different screen. I'll just let that roll. But how about that for trying to do two things? I said I could do two things at once. I guess I was wrong out there. Let me do this here. No, the order's not canceled. That was I talking about. Interesting. We'll have to take a look at that during a break out there. We're still live. But if we take a look at the A to B equals CD pattern, it hit the 1-to-1 level, 2054. But there's no reversal signal or anything along those lines. Now, that's taking a look at the same pattern, different time frames. Now, the question is, hey, why do you use a system like that? Let me go ahead and put a different chart on my screen out here. Let me do this. Let's just put the 2-minute chart on the screen. And let's do the opposite of this trade. So here is the chart. Let me go ahead and put the actual. Now I'm going to do this using a simulation account out here. Okay, so now we're looking at a 2-minute time frame, and if I wanted to go ahead and place a trade, I've got this thing. So remember, I say when you get into a trade, you really ought to have things bracketed. Right? You ought to go ahead and have things bracketed. You ought to have at least your stop and your exit. So I've got this little, it says here, ES bracket, entry. One cancels the other. I'm just going to simply go ahead. I'm going to sell right now. So I just hit to sell the ask. We'll see if it actually gets hit. If it does while we're on here, there we go. So there, the trade just simply got hit. I just went ahead on this just to show you, and I'm going to change it from the points here to dollars so you can see what's going on. And you can see it automatically went ahead and put a stop in here, which can be adjusted. It automatically went in here, and it put the exit strategy. So you've got one cancels the other. So so for me, where I'm trading different patterns out here, whether it's A to B equals CD, whether it's a seventh wave pattern, whatever it might be out there, I've got the ability to just simply take that action when I see something on my screen, go ahead and either, buy the ask, buy the bid, buy the market. It just gives you those three options. I can also move over and use something that's referred to as their super dome out there, which is the depth of market, and go ahead and place a limit order. So you've got all different kinds of ways to be able to utilize that system out there. So I hope that answers John's, and it was both guys were John out there. And it's not that in my recommendation to him and my recommendation to all is don't necessarily use a system that I'm using just because I'm using it. Go out there and find a system that works for you. There's all kinds of systems. You've got the Thinkorswim system. Now that one here with regard to NinjaTrader, I've got that tied into a couple of different brokerage accounts out there. So it's not the NinjaTrader brokerage account, not that you can't use it. It's a separate brokerage accounts that are out there. So just find a tool. Because in this case here, the question from John in New Hampshire was he was looking to day trade out there. So if you're day trading, what you've got to do is you actually have to be able to act relatively quickly. Now, when you say day trade, I don't know what that means. I don't know if that means a 2-minute chart or a 5-minute chart or a 10-minute chart or whatever that might be. But what it does say is and if you're the shorter the time frame, boy, the quicker that you need to be able to adjust the chart, be able to pull the trigger, to be able to have those patterns in place out there. So hopefully that and that one cancels the other. I just want to know that I would never ever ask you to do something that I don't do or I wouldn't do. The only way to touch people is to have been touched yourself out there. And so when you do place an order, the one thing that I would just simply ask that you do is that you just simply go ahead and make sure that you've done the work ahead of time. And the work ahead of time is whatever it is your strategy. Maybe it's buying a 0.618 retracement. Maybe it's selling a 0.618 retracement. It's to have your strategy and to know where your stop is to be placed, to look at both sides of the trade out there, because you and I, neither of us know which of these trades will work. This is just simply a distribution of probabilities out there. Now, to increase our probabilities, you and I have to go take a look at other things in the markets that influence the markets out here. We can take a look at price and volume. I get into this discussion periodically with people who send me emails who tell me that the only thing that there is price and volume. And I say hogwash to that. There are many. If that's all that there was, why would we have all of these other indicators and tools on the screen? Why would we have this? that's just complete BS. That's complete before Steve. What we have with regard to all the different things that are available to you and I is we've got the trading tower, the trading Stevie's trading pyramid, that is out here. What you want to do is you want to learn how to use these tools. You want to learn that the market really, in my opinion, breaks itself up into 4 different quadrants. It's like a table. A table does better with 4 legs than it does with 3 legs. Volume and supply, price and volume, very important. You can't trade without it. You've got to know what's going on. But you also have to understand momentum. If you are trading without understanding momentum or volatility, hey, how about liquidity out there? And when it comes to liquidity, part of looking at that Euro-Japanese yen is also being able to take a look at liquidity. How about just simply the energy, the angle of the move out there? All of those are really important, and these are just some different tools that are out there. So, I'm just sharing with you my experience. So like I say, I would never ever ask you to do something that I wouldn't do out there. But the one thing that I would ask you to do no matter what is that when you're trading, it doesn't matter to me on what time frame it is, that you always have an exit strategy on both sides of the trade out there. There's a time when you're right and a time when you're wrong. And really it isn't about you being right or wrong. It's about the trading pattern that it is that you are trading that is either right or wrong. And don't get too caught up into it. I heard John Logan, I just heard him talk about, take a stop, get back in. Get back into the water. And then I had to go do something else out there. And nothing could be truer. And I really appreciated those comments out there. And I hope that each of you, heard that. Hey, look, at the Hotel California, the beautiful thing is that we kick off at 8 o'clock in the morning. And from 8 till 6 o'clock, you get different views out here. I know that many people want the same view. Ain't going to happen. It is not going to happen here at TFNN. I can guarantee you that the conviction behind my belief about what the markets are going to do, that each contributor has their conviction because of their tools about what the market is also going to do out there. And that's really the way that it is. And you've got to decide, hey, which is it that you're going, and how does that influence, what tools it is that you use out here? You want us to have these differing views, or at least be able to, in my opinion, to be able to provide you with these different analysis of what the markets are going to do out here. If we all danced on the, like, I don't know, I love, I'm not a great dancer out there, but, you got people who have different dance steps. And so the markets has its own dance steps as well. Okay, so enough about that. Hopefully I answered those questions out there. If you had any questions, I'm sure I'll get a slew of emails, but that is a beautiful thing. Okay, so now let's go take a look at some things that are moving in the market. Let's go take a look at CarMax, KMX out here. If we take a look at CarMax, boy, this thing gapped up nicely. This is a daily chart here this morning. What's the deal here? What do they have? Looks like just out with their earnings. So if we take a look at CarMax, boy, this is a nice move out here. Big volume, 1.6 million shares out here. This thing has had a couple of nice signs of strength here recently. It's having one today. It had one here on the trading session of December 19th, 6.6 million shares the upside. That gap, looks like that gap may have gotten filled. How about that? Price came back, looks like and formed a little hammer candle back here on February the 2nd. That was 1.2 million shares to the downside, going against 6.6 million shares, and then off to the upside here. Now, this high that's in place today is being taken out with volume. 1.6 million shares, and that high's got 4.5 million shares as far as its A to B equals CD pattern out here. So, excuse me, price projection inside of CarMax, just to give you an idea of where this is likely headed to, you'd have to say, well, your 1-to-1 is going to take it up to the 86.27 level. And I'd say 86.27, maybe even take it up to the 93.19 type area. And again, that is CarMax, KMX being its ticker symbol. If we go take a look at Tesla, let's go see what Tesla is doing out here, TSLA. Tesla's up here this morning, trading out at 191.90. What do we know about it? It's trading here at its point of control with inside its TAS market profile box out here. Okay, so it looks like one of those trades, that was out. I've got another trade that is out here. I think this is the one that I adjusted let me do one thing here. I'm going to go ahead and adjust this up because we're seeing a pretty nice move here. I'm going to go ahead and move this up to 2061 now. And then during the breakout here, I'll go ahead and adjust that trade. So, hey, there's that live trade. Taking that G pattern here this morning, it's up about $1,172 as we speak. Good day's work. This is Steve Rhodes with TFNN. We'll be right back.
you take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's up 93, S&P is up 11, Composite's up 17, the Russell's up 6.5 points out there. So, as each of you know, I've been calling for the market to form its next bottom. The original target was this past Tuesday. It actually came in last Thursday out here. I do not know how the market is going to close today. My suspicion with regard to how the market's going to close today, the Euro-Japanese yen is giving us that signal as we speak right now. That's up at the top of its trading range for the day. If If we take a look at what's going on here in the summation indices, we now have the New York Stock Exchange, which, by the way, yesterday, and it's the wider swath of the market, it gives us the more clear signals with regard to what's going on. Its price oscillator closed back above that zero line. It was only down just slightly below it yesterday. It was in bullish formation, by the way, the New York Stock Exchange yesterday, as we expand this up on my screen, a nice little hammer candle after a short little decline out there, a little bullish engulfing candle today. This is giving us the message that the bottom is in. This is the bottom that takes us up into the May 4th time frame. If we take a look at the NASDAQ composite, which is, sort of been the leader here to the downside as we speak right now, its price oscillator now back above the zero line. Again, I can only report to you what's going on at 9:55 a.m., but hey, if the markets close here like this, it will be in bullish formation out here. The Dow is struggling to get up there. It's trying to get up there. It's been kind of weak, but it's just really made kind of a double, triple bottom out here, and that's looking back at the March lows. So, let's go back and let's take just to summarize where it is that we're at in the market out here. And as we took a look at a quarterly chart, the markets have done absolutely nothing since January 1st. Really been a sideways move. This is where the power of trading in these intraday patterns is so powerful. And until this changes, until we see a real breakout above those highs out here, you want to take a look at those different signals. If we look at the VIX index right now, VIX index has rejected the 50-day exponential moving average 4 days in a row. Today is day 5. Maybe it's 5 times the charm out there. Hey, folks, if you're off to start